really interesting is I'm going to move the time frame up a little bit further here. And then we can look at from 2008 onward, just so we can get a more clear view on what's actually going on today. So just before 2008, at about 2005, we can see that the ratio on this chart was 746 at the peak. Now, if you converted your gold, if you converted your dollars into gold because you saw this ratio that looked quite high during this time period, like there's a pretty solid peak right around this 2005 kind of level. And you could start to see in the United States that real estate was going crazy. People were starting to invest their life savings into multiple properties. The prices of homes were just skyrocketing, like 25% per year, if not more. You can start to think about converting some of your dollars into gold. And if you did that, you would get roughly about 746 ounces, somewhere near the top around here, right? By come 2012, you would only have to sell 153 ounces of gold to buy a piece of real estate in the United States. And you started with 746. So this is how the ratio works. But what I was also looking at is, let's just zoom in even a little bit further on this ratio chart. And we can see that during 2020, we were experiencing just like an insane real estate market here in Canada. And that's what I'm talking about right now. Here in Canada, it was just absolutely nuts. There was lines out the door. People couldn't even go and inspect a home because they would be worried about the property actually selling by the time the inspection was done. It was absolutely nuts. So if you take a look at these peaks here, back in 2019, you experienced you could have purchased 292 ounces roughly of gold, and then back in 2020, if you held until like right now, you would only have to sell off 125 ounces of gold to purchase an average piece of real estate. This is measuring in the United States. It's roughly about the same in terms of dollar amounts here in Canada as well. And in fact, actually, gold has performed better in the Canadian currency than in the United States currency. But we'll just kind of try and focus on the U.S. dollar and U.S. market right now. And what I was starting to see in this chart is my technical analysis brain starts to look at this chart and starts to draw lines in my head. So we could take this low from 2011, and if you connected it all the way over here, and then there's an obvious, I would call this like a ceiling. Like for example, it's kind of hard to break through this general area right here, which is about $300 per ounce, or 300 ounces, of gold. So, I'm looking at this chart, and this is where I'm going to go back to the article here, and I'm going to teach you a little lesson in technical analysis, and then we're going to apply this to that real estate to gold ratio, and it's going to show you something very, very interesting. So bear with me here. This is not as complex as it really seems, but I'll walk you through this here. So I created this chart here in the newsletter, and it's linked in the article down below. You can actually see this is a bullish, meaning going higher stock movement. So if the price of the asset goes up, reaches a ceiling, and then bounces back down, now we've created a floor, and a trader might essentially buy the floor, sell the ceiling, but if it breaks out, then you would actually want to buy the breakout, right? And that's how a stock going higher would actually normally behave. Now, this is super simple. It might trade around in a range for a little bit of time, then break out. But to keep things very straightforward, you have an upward sloping chart like this. We've reached a ceiling. You would normally bounce back lower, reach some sort of bottom, that's where you would draw that floor in, and then you would start to move upward, potentially breaking out. Simple breakdown of a bullish chart pattern, creating some consolidation. So we create this channel right here, and then a breakout tends to happen from there if momentum is pretty good. That's a bullish chart, right? But I want to show you what a bearish chart looks like. It's essentially the inverse of what we just went over. We can see the price of a stock or an asset is going down. We break through this point of resistance. Now that point of resistance becomes a ceiling. Eventually, you're going to get some sort of bounce. That's going to create a floor. And then you bounce up, tap the ceiling, and then continue the downward movement. And that's generally how a bearish chart pattern actually works, right? So you've moved lower, you've created the floor, you touch the ceiling, and a trader might think, I'm going to buy the floor once we start to bounce here, and the trader might pick up shares somewhere around like here, and then sell that ceiling right here, and then the movement would continue down lower. Now, knowing the two things that we just went over, what I started to do is apply this theory and price charting kind of pattern to the real estate to gold ratio. So like I said, my chart-minded mind starts to draw lines, and we can draw lines right here. So this is our floor, and this is our ceiling. So based off of the lesson that we just went over, what is likely going to happen here, right? What is likely going to happen? We see a chart. The real estate to gold ratio declining into a floor. Now, maybe we could consider buying the floor back in 2011. So you would convert your gold to homes back in 2011. Then if you did that, then you timed the market absolutely perfectly, because that was the bottom in real estate. You now own a lot of real estate and some gold, right? You start to realize, okay, we're struggling to break out of this point right here. I'm going to draw the line up to this point and see what happens. We start to bounce lower. We make another attempt at the ceiling, and then we start to bounce lower again. Okay, now we've tested this ceiling 1, 2, 3 times, and then experienced a drop lower. We would have at this time thought about maybe selling off your real estate for gold ounces, and you would have experienced this, and then a big move back upward. But I mean, if you're just following along and just not really any skin in the game here, what does the chart pattern actually tell you when it breaks right here? Right? So let's hop over to the real estate to gold ratio and just look at how many ounces that is. So that's today is 125 ounces of gold to buy an average home. But if you use that chart pattern and chart lesson that we just went over, what is likely going to happen in the future? Well, a bearish chart, which is what we've determined is happening with the real estate to gold ratio, would break through the ceiling, or actually create the ceiling, create the floor, and we've tapped that ceiling, and now we've broken lower. So using technical analysis, we can actually see that the future might look similar to this, because we've broken through that floor. And I would be saying to myself, watch out below. Like, oh my goodness, this is really crazy stuff when you apply the charting pattern to the ratio. And it almost is like it's signaling, because we have this breakout down here, that in the future, real estate is going to continue its decline in price. Gold is going to continue its rise in price. This ratio chart is going to go somewhere maybe down here. And at some point in time, it's going to reverse and put in a floor. But it's not right now, because we're currently breaking below this floor that we've called that we've drawn, and it connects to that 2012 floor that we created there. So we know there's some sort of support right here. And in fact, if you hop over, you could see that we did actually a little bit like, we struggled for a moment, right? We struggled for a moment to get through there, but eventually we broke. So either what's going to happen for this ratio to continue lower is real estate is going to have to decline, or if real estate doesn't decline, the other thing that could take this chart lower is gold would continue its ascent higher, which I think is a pretty likely thing to happen. But I also think due to some of the catalysts that I'm going over in this article, like for example, this, and also some of the stats that Royal LePage CMHC is putting out, this is signaling that in the future, real estate is likely to come down lower and gold is likely to go down higher. And this real estate ratio is showing us that that is likely to happen due to that breakout down here. Now, this could reverse. Like it's not like a guarantee, right? Like it could reverse and start to float back up here. And in the article, I did put out a point where this would actually reverse. I'm pretty sure it was 139 ounces. Yeah, 130. If we broke above 139, that would be a bullish signal for real estate. Watching this chart play out here, right? So 139 is the point where this floor would be broken, and then we break back into this channel here, and that would be a point where I'd be watching and thinking, maybe that move is over, and maybe we should think about converting the gold that has appreciated so much over to real estate. But that is not happening right now. I'm just saying, like, if there was a signal to watch for and a number of ounces to watch for on this real estate to gold ratio, I would be thinking about that 139 level. So I'm going to leave the article for you to kind of go through. There's a lot of great information in here and a lot of interesting points and statistics that you can go through. I'm going to link this in the description down below. If you want to get access to the paid version of my newsletter, it's $9 Canadian a month. So that's super cheap, especially if you're in using American dollars. Some of the benefits that you actually get, actionable trade alerts on a short-term swing trade kind of basis. That's kind of my bread and butter. That's what I'm thinking about the most in 2026, especially as the S&P 500 declines. I've just posted a video telling everybody that, you know, the S&P 500 just signaled a breakdown, and it's actually breaking down on the chart. You're going to want to watch that video if you're invested in the S&P 500, that is for sure. So you get actionable trade alerts, and that's part of the paid part of my newsletter. And then you get access to a longer term portfolio and a watch list with more in-depth analysis on the charts. And I basically use a number of indicators to signal when to enter and exit some of my long-term holds that I might hold for maybe like a year or maybe even like half a year or something like that, or maybe even longer. It just depends on the trend and when those indicators signal that, you know, we should start to exit the position or start to enter that position and ride that wave upward. Right now, the S&P 500 is starting to decline. That's why I think it's going to be a great year for swing traders, and you might want to get access to those actionable trades that I'm actually taking with my own money. It's not investment advice or anything like that. I'm just going to tell you exactly what I'm doing with my money, and that is where I'm going to leave it. Thanks so much for watching. If you like this video, hit the like button for me. It really helps out the channel and get this video out to more viewers. Thank you so much for watching. My name's Anthony, and I'll see you in the next one.